Hey guys, welcome back to Yogic Investment Channel. I hope you all are staying well and safe. Lot has been talked about historically the biggest IPO of Ant Group. Last week there was a news that Ant Group's valuation is reportedly going to further increase from 250 billion US dollar to 285 billion dollar, a surge of 35 billion dollars. Indeed, a big jump in the valuation. What does this surge mean to the fellow investors like you and me? It means investors are going to pay more for the same IPO. I'm sure you would have some burning questions like by paying such a high for the IPO, would I still be able to make money over the time? And if so, then how much? In this video, I'm going to answer this question. Stay tuned till the end of the video to get the answer. At this juncture, I would also like to remind you to listen to my previously published video to understand the business fundamental of the company. Let's first briefly look at the business of Ant Group. The company enables 2000 plus financial institutes for selling of their financial services or products to 1 billion plus users through its mobile app called Alipay. These financial institutes had sold 125 trillion RMB worth of financial products through Alipay in year 2019. Ant Group charges the services fee from these financial institutes as a percentage of the total value of the financial products enabled through Alipay. Through Alipay, the company enables selling of four major categories of financial products such as online or mobile payment or credit or loan or wealth management and the insurance, and calls this segment of business as digital payments, credit tech, investment tech, and insure tech, respectively. Now let's look at each of these business segments. For digital payments, consumers use Alipay app to make payment to the merchants either in store using mobile phone or online for the purchase of their goods and services. Where the credit tech provides channel for their partner banks or financial institutes for selling the secured or unsecured loans through Alipay to the merchants or the consumers. It also provides the risk management services to the banks for offering the loans or credits to the consumers or small business, where the investment tech allows wealth management partners to sell their money market or investment funds through the app to the consumers, where the insure tech allows partner insurance companies to sell their insurance products such as health or automobile or properties, etc., to the consumers or the businesses. Now the question is how much each of these business segments generates the business volume for Ant, and for that let's move to the next slide. Let's first dwell into the payment service business segment of Ant. This slide depicts two things. First is China's overall payment service growth potential in the next 5 years, as shown here in blue color on the left side in the slide. The second is what is the Ant's market share of its payment service in China in 2019, which is 55.25%, as shown into the gray bar. And also I have also tried to forecast business volume of the Ant business service in next 5 years, as shown in colorful bars. So here all the percentage numbers here shows the Ant's market share. Now, as I have explained in my other video, the business volume of Ant's financial services represents the total value in RMB of financial services that is enabled through its Alipay application for their third-party financial service provider partners who sell its financial products to the end users through the Alipay app. It is very important to understand that business volume enabled through the app is not the revenue for Ant. The revenue of Ant is fees as a percentage that company charges to the third party financial service partners on the business volume that is enabled through Alipay app. For example, as we have seen previously, for the payment service, the Ant charges 0.05 percentage of the total payment volume enabled through the app for the merchants. Now, as you know, no one can precisely forecast the business volume of any company. So, I have considered three potential scenarios here for Ant, which are conservative as depicted in yellow, moderate in green, and optimistic as shown in orange for the forecast of 2025 business volume. For each scenario, I have considered different percentage of the market share that Ant could potentially have for the payment service by the year 2025. Now, for the conservative scenario, let's assume that Ant's market share will drop to 40% in 2025. Why? Because new competitors are entering in the China market, right? And for the moderate scenario, Ant's market share will very likely to drop by lesser amount to around 50% because Ant is able to leverage its parent group Alibaba uh, ecosystem to maintain its market share. For the optimistic scenario, assuming that Ant's potential market share would remain the same at around 55%. So, how much of this business volume translate into the revenue for the Ant group? Now, for that, let's look at the next slide. In this slide, let's talk about the Ant's revenue from the payment service segment. Left three bars shows the revenue growth of the Ant payment service over the last 3 years from 2017 to 2019. As you can see, it has grown from 36 billion RMB to 52 billion RMB in 2019, where the right side colorful bars depict the revenue forecast of Ant's payment services in 2025 based on the business volume forecast that we have discussed in the previous slide. Now, considering that Ant will very likely to be able to maintain the same 0.05% fees that it charges to their merchants, the payment service revenue of the company is derived for each of the scenarios in the year 2025 as shown on the right side, the colorful three bars of the slide. Right now, for the conservative scenario, this translates to 77 billion RMB revenue for the Ant in the year 2025. Well, for the moderate scenario, it comes to around 96 billion RMB. For the optimistic scenario, revenue is expected to be 106 billion RMB in 2025. Now, this doesn't consider marketing services for merchants that the company has just started offering from first half of 2020, which the company expects to grow significantly over the next few years. Now, stay tuned till the end of the video to get answer of how much potentially your money invested in IPO could grow in the next 5 years. This slide is similar to what we had discussed in the slide number 4 for the payment services overall China market and Ant's business volume growth potential in the next 5 years. But this slide discusses about the credit service of the company. As shown here, overall China's credit market size is expected to grow from 19 trillion RMB in 2019 to staggering 50 trillion RMB in 2025, as shown in blue bars left side. In 2019, the Ant's market share was small of just 10.6%. Hence, it has significant potential to grow in the next 5 years. Now, considering that different market share growth potential of the Ant's credit service for each of these scenarios in the year 2025, let's assume that for the conservative scenario, the market share will grow to 20%, which translates to 10 trillion RMB business volume in 2025. Now, if we assume 25% market share for the moderate scenario, it comes to around 12.5 trillion RMB business volume for the Ant. Now, optimistically, assuming 30% market share, it translates to 15 trillion RMB business volume for the company in 2025. Now, important question is how much of this business volume growth will translate into the revenue growth for the company's credit tech services in 2025. Now, for that, let's look into the next slide. Here I have derived the revenue forecast of Ant's credits tax services based on the business volume forecast that we have discussed in the previous slide. Now, considering that Ant will very likely be able to maintain the same 2.08% of the fees that it charges to their financial services provider partners, the credit tax revenue of the company is derived for each of these scenarios in 2025. Now, for conservative, moderate, and optimistic scenario, credit tax revenue is forecasted to be 208, 260, and 312 billion RMB respectively in 2025, as it is shown here in three colorful bars. Now, for investment tax service, as shown here in the blue colored bars on the left side, China's overall market size is expected to grow from 160 trillion RMB in 2019 to 287 trillion RMB in 2025. Now, considering Ant's very small market share of just 2.12% in 2019 for investment tech business, the business has a significant potential to grow in the next 5 years. Now, considering different market share growth potential of Ant's investment tech services for each of the scenarios, it translates to approximately 10, 14, and 20 trillion RMB business volume in 2025 for each of the scenarios respectively. Now, we are not too far for the end of the video to get to fundamental question of our investment growth potential. So stay tuned till the end of the video. Considering the investment tax business volume growth potential that we have discussed in the previous slide and assuming that Ant will very likely to be able to maintain the same 0.05% fees that it charges to wealth management providers for enabling their wealth management products through Alipay app, the Ant tax revenue for the conservative, moderate, and optimistic scenario is forecasted to be around 50, 70, and 100 billion RMB respectively in 2025. Let's look at the last business segment, InsurTech. As shown here in the blue colored bars, China's overall market size of annual insurance premium is expected to grow from 4.3 trillion RMB in 2019 to 8.6 trillion RMB in 2025, almost double. Considering Ant's very tiny market share of just 0.8% in 2019 for the InsurTech business, the business has significant potential to grow in the next 5 years. Now, considering different market share growth potential for each of these scenarios, it translates to approximately 30, 344, 600, and 860 billion RMB annual insurance premium business in 2025 for each of the scenarios respectively. Considering the insurance tax business volume growth potential that we have discussed in the previous slide and assuming that Ant will very likely be able to maintain the same 23.5% fees that it charges to insurance products providers for enabling their insurance products through Alipay app, the business's revenue for the conservative, moderate, or optimistic scenarios is forecasted to be around 81, 142, and 200 billion RMB respectively in 2025. Right now, finally, let's look into the next slide for the potential gain that one can get in next 5 years from investment in IPO. If we add up revenue of each of the Ant's business segments that we discussed in the last couple of slides, we get total revenue of the company. As shown here, total revenue in 2019 was 120 billion RMB, which potentially could grow to around 400 or 570 and 700 billion RMB respectively for each of these scenarios. Now, assuming that Ant launches IPO at the valuation of 250 billion US dollar, which translates into 1.675 trillion RMB, this represents 14 times of 2019 revenue. Now, assuming that Ant will trade at the same valuation multiple of the revenue in 2025, The company's market valuation could potentially reach to approximately 5.8 or 7.9 or 10 trillion RMB for each of these scenarios in 2025, right? This means your IPO investment could potentially grow by 3.4 or 4.7 or 6 times by 2025, depending on which scenarios will play out. I hope what you have learned from this video will help you in making intelligent decision of investing in the Ant IPO. Please note that all the forecasts presented in this video is subject to the risks that Ant's business is, which I have discussed with more detail in my videos on here. Watch that video to further sharpen your investment decision. In order to generate more such videos and reach out to the larger audience with the objective of helping them in generating better return of their investment, and if you like this video, please click like button below. To get notified for new such videos in the future, please don't forget to subscribe to my channel Yogic Investment and enable notification bell below. Stay safe and see you again. Bye.